morning. Welcome to the Smart Business Series, hosted by the North Tampa Bay Chamber of Commerce. Before we bring up the man of the hour, we're actually going to bring up, in place of our sponsor, we got to pay some bills. So we're going to bring up our CEO, Ms. Hope Allen.
All right. So, hello, it's me. Okay, you can hear me, right? Okay, I know. Okay, I'll use that. Okay, so the Tampa Bay Times and the Wesley Chapel Weekly is our sponsor today. I am not with the Tampa Bay Times. They are unable to be here today. So they did pay for the sponsorship, so I thought I would give them a little plug. Thank them for their sponsorship. The Wesley Chapel Weekly, if you haven't heard, comes to all the driveways in the 3 zip codes of Wesley Chapel. They had a grand celebration at Pino's Palette, I think 2 weeks ago. So be in the lookout for that. Don't run over it in your garage or in your driveway if you live in Wesley Chapel. So in lieu of their additional few minutes, I thought it would be really fun that if somebody, the first one to raise their hand, would want to do a 1-minute commercial about your company. Mary.
All right, Mary.
I only get 1 minute? Okay. Yeah, 1 minute. Anyway, my name is Mary Hervatten Nash, and I own the Advisor magazine. It's been around for 35 years. It is the largest single direct mail publication serving homes in communities in New Tampa and Wesley Chapel. I also have a few runs in Temple Terrace because I own Shapes Fitness for Women in Temple Terrace, which is grand opening on March 30th, and you're all invited. The magazine brings business and community together. So any articles that'll be in the magazine are about the businesses that are in the magazine. We also can back all of the businesses that are in the magazine because I know them pretty well. And some of them have been in for 35 years and some 20. Shapes has been in there for 20 years. So it's kind of neat. So if you'd like to grow your business through the Advisor magazine, which goes to homes in communities in New Tampa and Wesley Chapel and a little bit of Temple Terrace, see me. And thanks for making the North Tampa Bay Chamber of Commerce part of your day.
Oh. That was a beautiful soundbite. Thank you very much.
All right. So thank you for joining us today. And today we have Mr. Tom Murtha. He's a CPA with over 30 years of experience advising small to medium businesses, so we all could benefit from the knowledge that we're going to get today. Tom is currently a partner with Murtha & Murtha LLC, a Wesley Chapel-based planning and consulting firm. Today, Tom has started with his son Patrick in 2010. He started that business with him. Having founded and operated several small businesses throughout his career in New York and Florida, Tom is uniquely qualified to discuss today's topic. Bringing to the stage Mr. Tom Murtha.
Well, thank you very much. I got to say that of all the introductions I've ever had, that one is by far the most recent. It seems like I know about half of you here. We've worked together or we've met together at other venues. So today we're going to talk about something that everybody seems to be interested in, which is money and how to make it and how to lose it. So we're going to go through, there are lots of mistakes. First of all, how many people here have been in business for less than a year? Are there any? 2 years? 5 years? 10 years? Wow, so we got a good range here. So probably, like me, you've probably made a lot of the mistakes we're going to talk about. So, you know that you've heard all the statistics. New business startups often fail. The first year, 20%. The second year, 30%. By year 5, 50% are gone. And by year 10, 70% of those businesses don't exist anymore. So the flip side of that is that 30% of these firms do survive and they do succeed. And the question is, what are they doing that's different from the ones that didn't make it? And that's kind of, I think they're aware of things and they're doing things that the others did not do. So we're going to go through several different aspects of planning and starting and running a business and where the pitfalls can be. And the first one probably is when you start out, what's the first thing you do when you think of a business idea? You start planning it out. Okay, a lot of people plan it out on the back of an envelope. That's fine, at least that's better than nothing. But it's really key that you have, right from the inception, a really good business plan. And the business plan should encompass a lot of different things. The business plan should encompass, it should tell what you want to do and how you're going to do it. And the normal business plan will have like an executive summary, and you'll have a business description and an organization chart and some marketing plans, a little study of your competition, and basically all the things that you need to know to get started and to really know where you're going. Part of that plan, a very important part of that plan, is the financial plan. Without that, you really can't go any further. You have to understand and plan where the cash is going to come from and where it's going to go. And you'll want to have a budget so that you can compare the budget to what's actually happening as you move along. Running a business without a budget or a financial plan is like trying to navigate in a strange town without maybe a GPS. So your budget is your GPS for your business. It's your financial GPS. And a lot of people really budget by wishful thinking. I think they might say something like, this year I want to increase my sales 50%. But they stop right there. That's wishful thinking. If you do nothing, that's just not going to happen. So what you really need to do is plan out exactly how you're going to reach those numbers. What activities, who's going to do it, numbers of calls, whatever it is, depending on your product or service. So you really have to have a really carefully made out plan as to how you're going to achieve those financial items. So, your sales. So what drives the whole budget is your sales, really. It's the top line. Sales, and then what it's going to cost to operate. And hopefully there's something left at the bottom. A lot of businesses fail because they fail to do this kind of planning. And what happens is unexpected things happen, and they get unexpected and unpleasant financial results. They run out of money. Virtually everything we're going to talk about today translates into running out of money. I mean, why are you in business? To make money. So, if you're not planning it out properly, you're gonna run into problems. So, a major part of a major reason for failure is failure to plan. They say, as the saying goes, if you fail to plan, you're planning to fail. So that's really key. So even if you've been in business 10 years, we run into clients all the time that don't have a budget. They've been in operation 10, 20 years. They don't have a budget. You'll say, what are your sales going to be next year? Well, we don't know. Hopefully it'll go up. The minute you put a budget in and you start showing them month by month where they stand next to that budget, whoa, they start making decisions. They start changing how they operate their business. Before that, they're not getting information. They don't have that roadmap. If you have a budget, it causes you to look and say, wow, I didn't know I was spending that much. I got to look at this. Or, hey, my sales aren't where I expected them to be. I have to put a plan in. Related to this is setting goals. You have to set goals, and that's really what the planning process is. You need to set goals to where you want to be at the end of the year. You should always know how your business did during the year. And a lot of people don't really understand it. They get the financial statement, they don't understand what's really happened. But one of the things you need to know is whether your business is increasing in value every year, because if it's not, what's the point, of doing this? Really, what's the main reason people buy a business or start a business? It's to sell it eventually. There'll be a day that you want to sell. So you have to be constantly watching to make sure that you're going in the right direction with the business, and that it's that it's going that way, that it's going positively, and you're increasing in value. If you're not, you're doing something wrong. You need to reassess. So there's a lot of help with setting goals. There are lots of books written about goal setting, and one of the things one of the ones I really like is what is it? Is OKRs. Anybody heard of OKRs? Okay, it's objectives and key results, and basically it was developed by Andy Grove during his time with Intel, and it's been used by Google and Uber and Twitter to manage their goals. And what it does is it actually makes accountability with the goals. Goals are shared with, the goals are set, and then there are measurements as to whether they're making them or not, and they review this on a regular basis. And everybody in the organization is aware of that. How many employees do you have? How many people work just by themselves? How many have 2 employees? 1? 5? More than 5? Okay, so we got some good sized businesses here. So, you know, with OKRs, you actually develop a goal, and then you develop the measurements for that goal, and it's really worked remarkably well for companies of all different sizes, and it works even well for small companies. So it's something you should really look at. John Doerr wrote a book called What Matters: How Google, Bono, and the Gates Foundation Rocked the World with OKRs. It's a great book. I would recommend anybody reading that and learning about these OKRs, because it really changes how you think about your business. You know, another factor that hurts people is legal structure. A lot of times people, in the excitement of starting their business, they don't really consider their legal structure. Some people don't do anything at all. How many people here operate as a sole proprietor? LLC? Corporations? And why did you make those choices? Mostly your account. Well, that's good, because you know people come to us and they've made the wrong choice of what they should do. Sometimes we'll get somebody that's working by themselves and they're a corporation. Now what happens? Now you got to file a corporate tax return, and that costs you money. It's not necessary. So to get the advice of your CPA or your attorney is really critical at that stage. But a lot of people ignore that fact. It ends up costing them more for professional fees. It ends up costing them more for taxes too. So some structures can be really tax heavy. So that's something to watch out for. Another big one, and somebody mentioned this when we were talking before, is mixing business and personal. Does anybody here use the business account to do personal expenses and stuff? And we see this all the time. And people will come in and they've got this big mess. It's a nightmare at the end of the year to go through everything and separate what's business and what's personal, just to get their taxes done. But even more critical than that is they don't really understand how they're doing. They don't have any idea how the business is doing, because they're just kind of using the slush fund to do what they want to do. And it's amazing how many people work that way. So and then they come in the end of the year with the shoebox and and all these receipts, and it's like we send them home and say add them up. So that's something that's an area where people get into trouble. We touched on this a little bit. It's very important to early on build your team of trusted advisors, and you should have a CPA, you should have an attorney, you should have financial planning on your side, and not that you have to retain all these people, but you should have some go-to people that that if you have a question or you got a problem, you know who to go to right away. So that's real important. A lot of people end up they think it's too expensive to have these services, but in the long run, it's really going to save you, and not having the right advice. You can't do everything yourself. And as entrepreneurs, we tend to think we can, and we end up, doing a lot of stuff. We have to be, as a business owner, you got to be a marketing guru. You got to be a financial person. You got to be a manager. You got to be a purchaser. You got to be a salesman. You even have to clean the bathroom sometimes. So it takes a lot of different aspects, but you can't really do everything yourself. So there are certain areas you're good at, and the things you're not good at, you need to bring in the help. So that's something that really hurts a lot of people. Any questions so far? Anybody have, or any experiences? Yeah. The comment was that one of the reasons for having a corporation is to minimize the amount of Social Security taxes that you have to pay. That's a double-edged sword in a couple of ways. Number one, and we see this with real estate people too. So there are some accountants that go and recommend get incorporated, be an S corp, and then only pay on a little bit of salary and take the rest as a distribution. Well, the IRS says that if you have earned income, you really have to pay Social Security tax on it. Now, as a real estate agent, your commissions are your earned income. So really, you're really liable legally to pay tax on everything you earn. For those who aren't real estate agents or have businesses that that have employees and there are other people out there making money for you, the IRS requires that you take a reasonable salary. And there are charts and studies on what reasonable salaries are for different places in the country. And right now, the Florida, we used to call it the unemployment, what is it, the reemployment department is doing audits. And we've had about 3 of them in the last year, which we've never had before. And what they're doing is they're even going to small companies, like a husband and wife that are retired but running this business, and they took a little bit of payroll, but they took some distributions, and they're coming in and reclassing this to salary, even though they're not getting any unemployment tax on it, because they're over the 7,000. So the problem I think that's going to come up there is they're going to report this to the federal government, and they're going to be getting letters from the IRS saying, hey, you know, you've been reclassified, you owe us payroll tax on this. So the one thing is you're running a kind of a thin line by trying to minimize your salary, unless it's a reasonable salary. If you got a business making $300,000 a year and you got 5 people working for you and you're taking 90, you can probably say that's a reasonable salary, and that's fine. You can take the rest as distribution, but it's got to be a reasonable salary. The second part is, and I just had this last weekend, I was with somebody he's a chiropractor, and he's spent his entire life showing about $30,000 a year, S corporation, showing $30,000 a year as salary every year. Well, he just turned 66, and he's looking to apply for his Social Security, and his benefit is like really low. And his wife hasn't worked. She was the office manager. He never paid her. so she gets half of his little bit. So these guys are really in trouble. They've been self-employed. They put a little money away, but not enough. They have no pensions, so they're relying on themselves. They're talking about selling the house and buying a trailer or something in Sun City Center and just retiring there. They're not going to be able to do a whole lot. So the other side of the sword is that there will be a day when you will get Social Security. And you know, they've been saying for years that, well, you know, it's not going to be there. When I was a kid, I mean, I remember my grandfather saying, it won't be there when you come time to collect. Well, I'm getting pretty close myself, and it's there. So I think it'll be there. They can't just take it away. So that's the problem with what you're talking about there. And you can get some bad advice, so you really should discuss it and really, you know, if somebody starts telling you, oh, you can take $20,000 payroll and the rest distributions, question that. That's probably not good advice. Yeah, the question is that, you know, there's a difference between taking Social Security when you're 62 or taking it when for me it's 66. I guess for some of the younger people here it's going to be 96, I know, you know. So it's going to be an issue. So the question is, you know, there's a difference there. Well, the other thing is you can wait till you're 70. The difference between collecting Social Security at 62 and waiting till you're 70 is 70% difference in what you get. So, I mean, the difference between, for somebody getting like a Social Security payment that's somewhere near the max, it's about $10,000 a year difference to wait till you're 70 than to take it at 66. So you really got to think about it. If you don't need to take, some people at 62, they need to take it. They got to take it. If you're working, you can't take it because they're going to take it away. So you're going to lose it anyway. So once you reach full retirement age, which is at least 66 for most people now, you know, then you can make as much as you want. But even at that, you know, we have financial advisors here. What kind of advice do you give people for when to take Social Security?
Take Social Security when you need it. Decision, really.
Yeah, I agree with you, and that's sage advice. And most financial planners I know say, if I'm going to work till I'm 70, should I take my Social Security if I don't need it? No, I won't do it. You know, if I'm still working. But you're right. If suddenly you get diagnosed, well, heck, I'm going to start taking it. So no, that's a good point. So I'm glad we got to cover that. So that's a financial mistake that people make, is not to get ready for retirement. That's to not do anything for their retirement. Like my buddy chiropractor, he really never put away anything but an occasional IRA. He's got squat in the bank, so they're going to be living on breadcrumbs. I mean, it's pretty scary because, you know, when you're young, it doesn't seem to matter. You know, you think it's going to go forever, but as you get older, you know what? You start realizing not only are there physical limitations that happen, but there's mental stuff too that happens where you just don't feel like doing the same stuff. And you know, there's going to be a day when your feet hit the floor in the morning, you go, nah, I think I'm done. And when that happens, you better be ready, because there's nothing worse than running out of money and not being able to live the lifestyle you lived the whole rest of your life. It's got to be miserable. So, you know, I think that's one area that people do fail, and that does cost you in business and in life, is to just not be ready, not to do the right Social Security, not to do some retirement planning. You know, if you can do a 401k and you can max it, do it. You know, clients come to me all the time and say, you know, what can I do to cut my taxes? And I'll look at their W-2, and they got a 401k, and they put $6,000 in it last year. And I'm like, well, you got to maximize your 401k. You can go, what, 20,000 this year? So you know, put 20,000. Oh, I can't afford to do that. Well, you know, how are you going to cut your taxes? Unfortunately, our system works such that you got to spend money to cut your taxes, and actually putting it into a 401k is investing it in yourself. So it's not spending the money, it's saving it. So, you know, people don't realize that. They just think of the current cash flow. So you got to get that mindset. So that's one area that people, you know, mess up quite a bit. Another thing is not putting agreements in writing. And I see this all the time. Anybody partners here with anybody? Okay, so if you have a partnership, like an LLC, this happens. You know, I didn't really tell you all my credentials, but I'm a certified valuation analyst too. So we do business valuations and that kind of stuff for all different reasons. For, you know, we get called on for divorces all the time, which I don't like to do. But we often get called in for like partners that have been together and they want to split up. And the first thing I ask them is, let me see your operating agreement. And they look at me like, my what? You know, and there's no, now an operating agreement will specify, hey, if partner A or B wants to get out, here's how we do it. How much is it worth? How much does he get? Well, it specifies how you value the business. Even if it says so much as you find a valuation expert to value the business. And then how will they be paid out? Well, what if one of the partners dies, you know, younger, and there's a wife and kids and everything? How do they get their money? You know, one of the advantages of a partnership is that, you know, if you're by yourself and you die, you know, probably in a lot of cases the business is gone. You know, it's a fear. But if you have a partner, you know, then you have a routine for continuing the business and for paying out the family of the guy who died. So a lot of times people don't have these kinds of documents, or they'll do some kind of joint venture or some agreement with somebody on a handshake, and this stuff leads to lawsuits. And you know, you really should have stuff in writing, and you should have the proper documentation. And your attorney and CPA can help you do that too. Do we have any attorneys here? Or? No? Another thing, another big one is ignoring accounting. A lot of people just ignore the accounting end, and this is a real costly one. We had a case where we had a guy wanted to sell his plumbing business in West Shore, Tampa. And we went in and we met him, and the guy had cancer and he had survived it, but he said, hey, I want to smell the roses, I'm in my 60s, I need to sell and get out. He had a very successful business. So we said, fine, we need all your financial statements for the last 3 years to figure out what this thing is worth, and then we can try to sell it for you. So he says, okay, and he directs his secretary to give us his QuickBooks file. Well, like weeks went by, we couldn't get anything. Finally, we really put the pressure on, and the next day he calls and says, she quit. So now we get a copy of the QuickBooks file, and I mean, this has been like a family member for 20 years. He turned all the accounting over to her, and she was paying herself double paychecks. She had an emergency credit card with $30,000 on American Express. It was for emergency. It was jam full. There were computers being bought on the books that he didn't. I mean, the stealing went on every possible way, even to the point he was doing these gas conversions for Tico, and you had to bill him in a certain amount of time. She wasn't bothering to bill him. There was a box full of unbilled stuff, and the time had run out. He lost like $60,000 in billings. I mean, no, this thing was in the hundreds of thousands, so much so that he came back and said, I just can't sell it right now. You know, so this guy's in trouble, you know. So, I mean, this happens. This is not the first time I've seen it. I've seen secretaries who had babies, and they had baby showers for the woman, and then they find out. We had one case where the lady was stealing. We found it when we took over the accounting, and we approached them with it. And it turns out they approached her, and they said, you know, what have you been doing? She says, I did do it. She was paying her own credit cards off and all kinds of stuff. She was taking money out, and they said, well, you know, what did you do with the money? She says, oh, I haven't. I was saving it for my retirement. I can give it back to you. And she actually had them. She wasn't even taking it to feed the baby. So you really got to watch. Like, so here's my advice, and things are more digital than my Stone Age advice used to be, which was like on Saturday morning every month when you get the bank statement, open it up and take a look at it and look at every check and make sure that you wrote the check, look at what came out, look if there's anything that didn't happen that you didn't know about. I mean, it's okay to trust somebody to do your bills and all, but you better be watching your bank account. Now with the digital world, I mean, you can get, every day you get an update. You know, if you have, how many people use QuickBooks? Yeah, QuickBooks online. You link to your bank, the feed comes down, it's like, it's beautiful. I mean, you can see right to the moment where you're at. So that's a big deal. That costs people money, and it's an area where you never know. You might think you have somebody you can trust that's been with you for years, and all of a sudden it's like, wow, you know, people can be funny, you know. So, you know, that's an area that I think you have to, that you could really lose if you're not careful with. So if you have accounting, make sure you're double checking. If you have an accountant on staff, a bookkeeper, paying the bills and everything, just make sure that you're looking over their shoulder a little bit. So the problem with small companies is you can't have the controls. A larger company, you can have one person depositing checks, another person recording the receipt of the checks, somebody else writing the checks, a fifth person reconciling the bank account. Today, everybody does everything on QuickBooks. They have one person does the whole thing, and there's no control. So you got to really watch. I guess we could go on and on with all this stuff. Another thing is, like, you'd be surprised at how many people don't have good websites. Everybody here have a website? Mm-hmm. Anybody that doesn't? No, I mean you. Okay. Well, 50% of small businesses don't have websites, and that's like taking your business and putting it out there and not telling anybody about it, or not hanging a sign outside your store. So it's like ridiculous. I mean, when you order a pizza from a place, where do you go to find out? You probably order it right on the phone. So I mean, everybody's using, you know, that, and social media shouldn't be ignored either. I mean, I know in our business, we probably get 30% of our new customers from Facebook. Believe it or not, I didn't even know what Facebook was till 5 years ago. My daughter put it on my phone so I could see my grandkids, you know. So you know, I mean, Facebook is an incredible tool. And, you know, I know in our Wesley Chapel, those who look at that page, if somebody says, hey, does anybody know a good CPA? We get a lot of love on that thing. And it's worked out really well. And we also have somebody who manages our company Facebook page. And she's out in California, but she puts content on a couple times a week and watches what's going on. And you need to do that. People think that they can't afford it, that they're wasting. Advertising and marketing is an investment. You have to do it. And you have to build your brand. People that fail to build their brand don't have a brand. You have to figure out what makes you different from your competition. You know, what is the customer experience that you can give that the other guy's not giving? So it's really easy if you sit and analyze it and start thinking about, why do people leave their CPA and come to somebody else? You got to figure out the reasons. And once you do, you solve those problems, and they'll come to you in droves. It's true of any business. We all have competition. There's nothing wrong with that. It's great. And usually the competition is not as good as you, so you're going to get the business. So that's an area that costs people a lot, is not having that social media presence, not having a proper web page. A lot of people try to do it yourself web page. It's worth investing in somebody professional to put a really nice, crisp web page up there that when people look, they say, these guys are professional. You know, that's what you want to have. And do we have mostly service providers here, or do we have people that sell product? Anybody sell products? Or you do? What do you sell?
Oils, vinegars, and spirits.
Okay. And
Brandy, yes. Our customer experience, people come to our store, we are in the shops at the Wiregrass.
right,
People
right.
can taste pretty much everything in the store, so a 50 years old cognac, and then they choose the size of the bottle they like.
Wow. So I mean, that's the customer experience. That's what you know. That has to be unique. So so if you're in a service business, especially, it's even more so. You got to give the right experience, because a lot of people do the same thing you do. Why are you better? What makes you different? What emotional need are you satisfying? You know, and I go back to what I do because that's what I know. But you know, people come in and like, you know, why do they come to my office? To get their taxes done? Yeah, but what do they really want? They want peace of mind. They want to leave my office and know that, hey, Tom has it covered, Patrick has it covered, Kyle has it covered. You know, we don't have to worry if we get a letter from the IRS. You know what? We tell people, just don't even open it, just bring it to us. We'll take care of it. There's nothing so terrible we can't fix. So, you know, it's you know, it's the experience that people want. It's what do they really come for? They don't come for paper. Nobody wants the paper. They want peace of mind. And so you have to figure out what it is that your customer wants. And if you don't do that, you're not going to get the sales. The sales translate into not making money. A lot of these things, all these things, even though they're not exactly financial, they all have a financial effect. They're all going to hit you on the bottom line somewhere. Another thing is not planning for tax obligations. You know how many people come. Very big with the real estate agents. They come in, they've had this great year, you know, hey, I made $120,000. Oh yeah, well, you owe 15% Social Security tax on that, and you owe another 25% on that, 40% tax on. They don't have it. So now they're on a payment plan that, you know, for the next 3 years, but the next year's already halfway there, so they're behind again the next year. So it's almost like a vicious cycle that the more successful they are, the more they owe in taxes, and that's the fact of life. So so we try to, you know, that's something you have to be aware of, your tax obligations. And we recommend for people that are self-employed to just, like, every time you get that commission check, put 30% of it away. Just put it away. Another big thing that people do when they're starting a business, well, I know a lot of you have more mature businesses, but a lot of people when they're starting a business, in an effort to get sales going and all, they drop their price and they go with a lower price. Really, it's a deadly spiral, because nobody's ever going to tell you that you're not charging enough. You know, they never come and say, Tom, you only charged me $500 for this. I think it's worth more. You know, nobody says that. And you know, I mean, it's the way it is. But the thing is, it's really hard to recover from a low price. You know, well, we only charge you $100. So they come back next year. Well, I know we charged you $100 last year, but this was really a $300 deal. You know, this is all crazy. So, you know, you don't undervalue be careful to not undervalue your services, especially in the service area. There's a tendency to undervalue it. I know a lot of even CPAs that don't think they're worth what they really should be worth. You know, you have to figure out where you are and charge it. And sometimes your fees may be higher than your competitor, but you're better than your competitor. So you got to really look at that whole thing. And if the customer experience is better, you'll be able to charge more. That's what you have to do. You have to develop the whole package. Because if you don't charge more, you're going to start losing money. And you're not going to you're going to have all, you know, I had a partner one time who said, like, he didn't like $100 tax returns because they recommended other people that had $100 tax returns. But if you get the guy living in the big neighborhood with the $1,000 tax return, his referrals are all his buddies that have $1,000 tax returns. And he was right. You know, this was back a long time ago when you can't go to H&R Block for less than $400 anymore. So I'm ashamed to say sometimes our prices, we're shocked because we quote a price and then we see their last year was H&R Block. We're what? You know. But anyway, you know, nobody will tell you you didn't charge enough, but they'll start to kick when your price gets in the right zone. So you get 2 or 3 people start to kick back on the price level. You know, hey, I'm there. Now you're in the right place. And you know, your price is your price, and you know, you're offering something. You just explain. So that's another area where people kind of doom themselves when it comes to this stuff. So are there any questions? I mean, I could go on and on, but it's 9:40. We've been talking for 40 minutes. Hard to believe.
Suggestion, paint these.
Excuse me?
Yes, and people to take a look at their bank fees.
Right,
Because
right.
that can end up costing a lot of money when you decide on a budget versus if you have enough money, you may want to look at a sweep account.
True,
And do a
true.
financial analysis, you're making more on the sweep than your fees. And also at all times, just keep on your bank saying, what else do you have that can lower these fees or increase my interest?
Absolutely. Yeah, not that they're paying a whole lot of interest anymore, but you know, it's like, it's kind of silly. Like, sometimes I get 4 cents.
Tom, can you touch on financial vehicles that you can do as a business owner between now and April 15th?
Well, you know, you pretty much closed out. The biggest financial vehicles you have are probably retirement plans.
Right.
And that's where it is. But most of them, well, there are a couple. There's a couple I like too. Well, the 401k, you're out. It has to be done by the end of the year or you're done. IRA, you have till April 15th. And, you know, that's up there now, so that's pretty good. But my favorite one is the SEP IRA, because you don't have to fund that SEP until you file your return with extension. So you can actually file an extension on April 15th and say, hey, I'm going to put $20,000 in my SEP. You may not have $20,000 now, but on October 15th, you may have the 20, and you can fund it by then. So you get like an extra 9 months to fund your retirement plan. So that's a good one. That is the number one vehicle. Now that the year's over, you're pretty much done with anything else. I mean, you know, the traditional tax planning things like buying equipment before the end of the year. People, if you need it, you know. When I have people that come and say, should I buy some equipment? Do you need it? No. Well, why are you going to spend the money on it? You know, it's lunacy, you know. So if you work, you know, the people that are in the size category that work with us, they get our advice during the year that, you know, if we see things going crazy, we start looking at it. If we know they're going to have an issue, we start looking at it with them and doing some planning and maybe get that 401k in. You know, that's a good way to offer something to your employees and not, it doesn't cost you all that much. So that's a good one. Any other questions? Or I think we're pretty much coming.
Can you pass that microphone from here?
Sorry.
Hi.
Hi.
So, let's say that you have a smaller business or a medium-sized, but it doesn't matter, that has been not budgeting, not making a financial plan, not really paying attention to the things that they're supposed to be paying attention to, and they want to start doing all of those things. Where would you tell them the most important thing to start? Where was the most important place to start?
Probably is to have some sense of your financial position every month. So if you're using QuickBooks, it's pretty easy. You know, you can just look at a financial statement every month if you know what you're doing. Now, back in the day when QuickBooks came out, everybody thought that when they bought QuickBooks, they also bought an accounting degree. So it was like we used to get QuickBooks files that were like, you know, it was a nightmare. It was crazy. So, but today QuickBooks has become a lot more transaction oriented. So people don't have to have an accounting background to say, hey, print an invoice, you know, create an invoice, pay a bill, you know, to deposit a receipt. You know, I mean, these are all transactional, and QuickBooks handles them quite well. So I would recommend the first thing, depending on your size. I mean, we get people that come and they say, I don't know what to do, can you help me? And we look at them, we say, hey, you know, we'll give you some advice now, but you can come back once a year. Then if they reach a certain size, we might say, hey, come on in quarterly and we'll look at your financial statements, or we'll put them together and give you a nice little thing and go over it with you. So first step would be to just make sure you're on like a QuickBooks or something, you know, so that you have an idea of where you're at every month, you know what your sales are, you know what you're spending. The second thing would be to put a budget in there and, you know, look at it and say, hey, you know, I did 250,000 last year, I want to get to 300,000. But just don't put that number in there. Figure out how you're going to get to that 300,000. I'm going to intensify my cold calls. I'm going to send letters out. I'm going to, whatever your marketing strategy is, you have to ramp it up or create new things. I'm going to improve my website. Google AdWords is wonderful. I mean, that can really work. You put a budget in for that, and that really can build a business very well. So there are a lot of different alternatives on how to do it. But I would say getting good financial statements on some kind of regular basis, whatever you need. I mean, if you're not doing that much, then you can do it twice a year. Depends on where you're at. If you got significant business, you need to know. And then when you reach a point where you need monthly, And that's where we work with a lot of our clients in that respect, with monthly financial statements and budgets, and and once you see, hey, I budgeted $10,000 for sales, I only did 8. Now you can question why. Oh, I took a week off, I went on vacation, whatever. And there are reasons sometimes for, there are valid reasons, but at least you're looking and you're not flying blind. And that's what you want to avoid. That's where you lose money, by flying blind. And I know guys who run their multi-million-dollar businesses out of their back pocket. They could tell you how they're doing this year because they know how much receivables they have, they know how much cash is in the bank, they know whether they made money or not. It's uncanny, those people are unbelievable. But not everybody can do that, and it's not advisable because things fall through the cracks. So I guess, are there any other questions? Or?
I have a quick one.
Yeah, sure.
So with the new tax laws, any quick suggestions for W-2 employees who can no longer write off expenses?
Yeah, that's a real problem. If you were itemizing deductions, you used to be able to take your work expenses and write them off, but now they've taken away all these miscellaneous itemized deductions. So it's really a problem. The only thing we've been trying to do is if your employer will if you can get reimbursed for this stuff, that's really the only way. But I mean, office at home, unless you're getting paid on a 1099, then you have a business kind of thing, and you can write all this stuff off. So it's either to get off the W-2 and go on the 1099, but that's no good because now you're paying your own Social Security.
Well, with our licensing, we can't be 1099.
It's a
We
mess.
have to be.
What are you?
Mortgage.
Oh, mortgage, yeah. You got to be W-2. It's rough. It's rough unless you get your employer to reimburse you for those home expenses. Then that's another story. They can do that, and people that have their own business that work out of the house too, that have been taking that little home deduction, office and home, and all those, and even mileage. I mean, you got people that are doing a lot of mileage. They can't write it off now if they on a W-2. It's terrible. We're seeing that. We're starting to see it. So I'm sorry, but there's not a whole lot you can do unless you can get them to pay for it. So.
Can you get your employer to bring away?
Yeah, there's a lot of ways. These financial planner guys, man, they have all the backdoor ways of doing this stuff. I know. I'm just saying. Yeah, I mean, if you can get your employer to do that, but how big is your employer, and how likely are they to start putting in pension plans and stuff? It's really hard to get people to do stuff.
No, I already tried to get creative last year, thinking ahead to this year, and
yeah.
can't W-2 and 1099 the same employees.
There's always a way to put something somewhere, if you don't have a plan anywhere. So.
So it's like they said, if Jeff Bezos and Warren Buffett can legally hide as much as possible, then I'm sure there are many clever ways of.
Yeah, well, they have the money to hire the guys that know more than I do.
And I'd like to.
Well, you're not Jobs, and thank God, and they will look at charts. They'll go to salary.com and stuff, and that's what we do, and that's what they're going to do too. They're going to come back and say, hey, a manager of a company doing $1 million a year and making money on the bottom line, and it doesn't matter. Your reasonable compensation only kicks in if you're taking distributions out of your company. So if your company's only making $10,000, you take $10,000, then you got no problem. But if you're making money and you're taking only distributions, you got a problem. If you don't take any distributions, no problem. So that's where that is. We're running out of time here, I can see. Running a business requires a lot of different skills, and it takes a lot of drive, a lot of dedication, a lot of commitment. And the one thing that most successful businessmen have, or women, is that they don't know when to quit, and they become successful. So you need to be willing and able to make the sacrifices involved, and watch over what you got going on, and consider all these little things that everything affects the bottom line. If you don't advertise, if you spend too much on advertising, you might lose. If you don't do enough advertising, you're going to lose. If you hire too many people, you're going to lose. If you don't hire enough people, you're going to miss opportunities. So everything affects the bottom line. So, to come in and come up with like 20 things that mistakes that cost you money, it's not just related to your bank account. It's all these other things. So we all make mistakes, and we just try to learn by them. God knows I've made plenty of mistakes in my life, probably every one of them, and that's how you learn. So we just have to learn and do better. And any questions to close up here?
I do have a question. So two, actually, one is about employing children. and also about college savings. So as far as, folding that into the business.
Yeah, I mean, there are things you can do. There are dependent care benefit programs. There's different things you can do, but you'd have to get specific on that. It's a little beyond the scope of what I'm doing here. But,
Okay.
that's something that you can check with your CPA, and they should be able to help you out with that. College savings programs are out there, and people go into them all the time. There's no deduction for it, but, you do get the benefit later when it grows tax-free. And there's all kinds of ways of putting away college money. So,
Okay.
anything else? Okay, well, thanks very much for coming out today. I appreciate it.
Hello, everybody. How's everyone doing? I had a great opportunity to meet with you all. My name is Mark Hamid. I am part of my wife and I own Home Care, First Light Home Care. This is a nationwide, 34 states, 220 locations, but we have franchise live here, work here. So what we do is we provide our adults 18 and over, as well as those seniors to age at home or wherever their home may be, such as assisted living, adult care, and so on, to assist them with their daily activities through certified nursing assistant and home health aide and running chores, groceries, shopping, as well as medical appointments, because there are many seniors who are not able to do those activities anymore depending on their age and so on. So that's where we come to rescue. We work in East Pasco as well as North Hillsborough area. So look forward to working with our community members here, adding value to our senior community. So with that, what I got out of it, thank you so much for the opportunity to speaking today. Tom and I go back as well. He has been an excellent advisor to us to start off, and just nailed our healthcare licensing not long ago, getting that second set of licensure to take more cases. So what I got out today, you indicated very much on business owners need to be wearing multiple different hats along the lines. You've got to be smart, you've got to be proactive. A plan of not having a plan is a plan to fail. I think that's a very cool commitment. I spent 20 plus years in banking, from a teller to senior vice president in retail, commercial banking, and financial services advisory area. So therefore, I've learned a lot from that. That very specific. You've got to have a spreadsheet, details, and track it like a hog. How are you going to what's happening? What do I need to change? And what are some of the aspirations and desires would be in an effort to change? So in conclusion, doing the same thing over and over again is what definition of insanity. With that.
Thank you, Mark.
Thank you, Mark. You got one, Ernest? We'd love to have you come on up here.
Thank you.
Yes, of course.
Hello, everyone. My name is Ernest. I'm Ernest Walker with State Farm Insurance, agent owner in the Carrollwood, Northdale area. And Tom, what I love about what you said today is your son, Patrick, who wasn't here. Patrick is a colleague that I work with directly, and he has instructed and through conversation with me some changes in my plan. But to hear you guys and your firm to be on the same page, it really helps business owners like myself. I have 4 employees, and we're all local. And what our job is to collect and protect. So we help you protect those things that you've collected. So with that, and thinking about what you shared with us today, Tom, it's very vital for me to make sure I spend time in the SEO area, search engine marketing, because of the transient nature of Tampa and Tampa Bay. So many folks are coming down like I did 3 years ago, moved down to Tampa area. So many are moving down, and there's such a legislative difference, and there's a lot of regulatory difference here in Florida that I'm able to help clients with by connecting with you folks. So special thank you to the North Tampa Bay Chamber and allowing me up here. And Tom, thank you.
Thank you, Arnie.
Once again, Rick Soriano with Soriano Insurance. Our family business is protecting your family and your business. Known Patrick, your staff, everything that you do in-house has always been very impressive. Today you talked about exit strategies, business valuations, and it doesn't really mean anything unless you start it off correctly. So I think that's probably the biggest transition that I really got out of it, is make sure that you start everything correctly so that you can have a business strategy, because no matter how much money you have, or you make, if at the end of the day there's nothing left there, you really have worked for free. Breadcrumbs.
You worked the job.
Yeah, you worked the job, exactly. But thank you, it was very good. It was
you.
excellent.
Good morning, everyone. My name is Carla Gibbs. I'm a financial professional with New York Life. I help small businesses and individuals crystallize their financial goals and objectives. I primarily specialize in long-term care, retirement planning, and life insurance. What I got from you today was talking about building your team, making sure you have a team of CPAs, financial advisors, and attorneys that kind of help each other, and you're starting that out early, knowing when to delegate and knowing when to do what you're supposed to do. Thank you for the opportunity to be here.